Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw that ES simply balanced in the upper part of yesterday's range, and overall buyers remain in control, and S&P has been and is the strongest market at this point in time. So heading into the open, we know that the buy side's in control, jobless claims is already out of the way, and the next major catalyst is the employment report due tomorrow morning. So as far as the price action today goes, most likely we're not going to make a really big move ahead of tomorrow's employment report. So we could just continue balancing. The volume situation is also pretty light. So far in the overnight session, we've seen very light volume, and this entire week has been below average volume, which usually means a limited range. So considering that ES is trading at the all-time highs, we still have to be careful on initiating long positions at any aggressive prices. And I think that the longs that we do take are going to be more about timing the trade correctly with the other markets also heading higher and playing a lot of defense on those longs off any higher prices that we do take. Otherwise, if nothing good sets up, then it may be best to wait for some better price action tomorrow after the employment report is out of the way. But what we do know is that the buy side is in firm control, and they can maintain control as long as ES holds above 66.5 to 68.5. That is a key support zone at this point. On the upside, 75 to 76 is the all-time high in the S&P. A break above that, there is no hard resistance on the upside above 76. So at that point, if volume remains light, we know that on light volume, you can get a, somewhere between a 7 to 10 point range. So then we'll just have to see what the estimated range is based on the low of day and project it out a bit, maybe 6-7 points, and that'll take us up towards the 79 quarter to 81 quarter. So in the event of a directional breakout above 76, the market could reach 79 quarter to 81 quarter, and at that point perhaps exhaust the range. Now if we hold below 75 to 76, then the market could come down to the 66.5 to 68.5, or perhaps test the previous VPOC at 69.75 and then find buyers there on first test. So the initial support zone is pretty key support short term, and holding above it would just tell us that buyers are still in control. If we break below 66.5, it doesn't necessarily mean that the entire trend is changing. The market would still be in balance, but below 66.5 we could go down and tag 63 quarter, and in the event of a pickup in volume, potentially that 58 to 60 zone, but at that point the range would again be exhausted and the market could just return back up towards the 66.5 to 67 area, with 67 being the key high volume node in this recent range. So overall, buyers in control above the initial support zone. Even if we break below it, we could get some short-term downside movement, but not much more below 63 quarter or 58 to 60 heading into tomorrow's employment report. That being the main catalyst. The expectation for today is for the market to more or less balance in a range, and how the market reacts to the initial support zone will tell us where that balance could take place, right? If we're holding the 67 HVN and that support area, then we can still balance at higher prices. If we break below it, then we could be looking at a slightly wider range balance at some of the lower prices. But overall, this market is in an uptrend and buyers will still be in control. So those are our main ideas heading into the open. Let's see how well the buyers hold it up this morning, and we'll take it from there.